Welcome to another episode of Chentology. Today we are talking about one of the most used indicators within the trading space. I think most of you can already guess it by what's on the screen, but today we're talking about Relative Strength Index, or better known as RSI. RSI is one of the most popular momentum indicators, and it measures how strong a move is on a scale from 0 to 100, where if price is moving up, the scale goes up, and if price is moving down, the scale will go down. This can tell you if an asset is either overbought, oversold, or in a neutral environment or in a neutral zone. So, the RSI scale moves between 0 and 100, where 0 is extremely weak and 100 is extremely strong. So, we have some levels in between, not just 0 and 100. We label below 30% as oversold, so below 30, around 50 as neutral, and above 70 as overbought. So how do traders actually trade RSI? Well, partially they do it based on signals. So the first signal that the RSI may give is going below 30 or around 30, signaling that it is oversold. When an asset is oversold, it means that the pressure downwards might have been excessive. So it's either a liquidation cascade or there's something happening in the market, and it might be the first signal of a reversal. So below 30 or around 30, it may signal a reversal upwards due to either a liquidation cascade, extreme sell pressure, or even though I don't believe that news move the markets, it might be a news event. On the other side, above 70, same goes for that. It might be a short squeeze, it might be news, or another event that is happening. As goes for all the indicators, the higher the time frame, the more data it has, also the more latency it has. But to a certain extent, the truer the data you're getting from it, because price had a longer time to actually give you the data. So if RSI drops below 30, it's oversold, above 70, it's overbought. And within these ranges is where people normally like to look for signals. What is my current issue with RSI? We might as well dive immediately into it before we explain the rest. Due to the fact that RSI has the latency, and due to the fact that RSI needs to have time in order to collect it, RSI also resets over time. So a price might be extremely oversold, what we have seen from the dump from 86 to 60 or 70k, but if price consolidates longer there, it does not actually give a signal anymore, because the look back period is only X amount of days. So it might work in most instances, it might work in most times on the lower time frame, but on the higher time frame, RSI has the tendency to reset as soon as it goes into a new range. So how do people trade this except looking at 30 or 70? Well, divergences. And divergences might be more powerful than the actual numbers itself. So what happens in a divergence happens when price and RSI are in a disagreement. Well, you would say, how can RSI and price disagree? Well, price makes a higher high and RSI makes a lower high. That means that momentum is weakening. Same when price makes a lower low, but RSI makes a higher low, price is strengthening. So in finding divergences between the actual price and the actual RSI, those can be more powerful signals than the actual number. So that brings me to a conclusion. What do I think of RSI? I think RSI is one of the better indicators there. It has been around for long. It's pretty trustworthy, especially not just for trading or for signals, but it's actually a good indicator to have an idea where the market is at. Is everyone neutral? Is it oversold? Is it overbought? Where are we within the spectral degree? As you can see on the chart here as well, and let's dive into an example. Bitcoin has, especially on the 5-minute time frame, been rising relatively well. But RSI on this point was already higher than this point and on all of these points. So price is still creeping up. So this would mean that we have a divergence on the 5-minute in RSI. How are we looking on the 4-hour? Last time price was at this point was about here. RSI was higher as well. So this could very well signal that we are indeed having a divergence on the RSI and that price would go down. Well, this is pretty interesting 4-hour candle, especially since we're in a Sunday morning and it's now 0.6% pump, but that's a different story. So if you're an RSI trader, it's a pretty good metric. I rate RSI a 7.2 out of 10. Let me know in the comments what you think, and if you have any other questions about RSI, feel free to ask.